Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Sales at the expense of profit margins. That's what this week's screen is all about. Kevin Matras here, head of our Research Wizard division, to help fill in the blanks for us on that. It doesn't really work, though, does it? Sales at the expense of profit margins. Usually when sales rise, earnings rise as well. But looking at the title of this week's screen, I'm guessing that we're going to be talking about the times when it doesn't.
That's right. This week I want to focus on sales and profit margins. And again, you know, everybody understands sales growth, but profit margins may be a different story. And I think now with earnings season underway, I think now is a good time to take a look at both of these things. So let's start at the beginning. Sales growth, that is the most important thing for a company. Without sales, there really isn't anything else to analyze. And looking at the sales growth numbers, that's going to show you how the company is doing. But again, sales at the expense of profits does not work, so it truly is important to see how much money the company is earning for every single dollar of sales the company makes. And that is what we're going to be talking about today.
So how do you define margin?
Well, margin is simply a ratio, and if you look up here, you'll see that the calculation is net income divided by sales. So if a company's net margin is 15%, for instance, that means a company's net income is 15 cents for every $1 of sales they make. And if a company's expenses are growing faster than their sales, this is going to reduce their margins. So in this earnings season, I think it's important that you need to take a look at, you know, what the company is saying. Take a look at the numbers. Take a look at what their sales are. Take a look at what their earnings per share are. But take a look at the margin. Are the margins increasing or are the margins decreasing? Are they making more for every $1 a sale they make, or are they making less on their sales? This is extremely important stuff to know, and this could be the deciding factor between whether investors buy a company after they have reported or whether they sell it once those numbers are released.
All right, parameters of the screen?
Yeah, the parameters of this week's screen is this. We start off by looking at the 12-month trailing sales growth, the current quarter versus 1 quarter ago, and we want that to be greater than their industry average. So you want to try to find the top performing companies in the industry. Then you want to look at the current net margin, and I want that to be greater than their 5-year average net margin. So again, I want to see these companies demonstrating the ability of growing their margins, increasing their profitability on their sales over a meaningful period of time. Then I want to kind of get more granular. I want the current net margin to be greater than the net margin from 1 quarter ago. If a company's margin has fallen last quarter, it is likely that they may see the same pattern again. So by focusing on the companies where their margins have increased, there is a likelihood that they may be able to repeat that, and those are the kinds of companies we're looking for. Okay. We want to put the probabilities in our favor, of course. And then, of course, we want to look at the Zacks rank. We're looking at companies with a Zacks rank of less than or equals to 2, which means we are only going to be including companies with buys or strong buys.
And some stocks that have come through the screen.
Yeah, there was plenty of stocks that came through, so there's a lot of choices to look at. Here's 5 of them. You've got Advent Software, DG Fast Channel, Dolby Laboratories, PNRA Bread, and World Acceptance. A lot of different industries, a lot of different stocks. What's interesting is that all of these companies, when they most recently reported, they all posted positive surprises, and all of these companies are going to be reporting again within the next couple of days to the next several weeks. All of these companies look very good.
All right, do you own any of those?
No, we don't.
All right, you can take a look at some more stocks that have come through this week's screen in the text version of this week's Screen of the Week at Zacks.com by scrolling down that homepage and clicking on the headline that's right next to Kevin's picture. And also, if you want to find out more about the Research Wizard software, which Kevin uses to achieve all of his screens, Zacks.com/Research Wizard is where you should be looking. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.